So why else do these particular trade setups make sense? Well, the other things I said, market volatility has actually decreased significantly. So back in 2008, 2009, when the credit crunch was on, you had big moves. It just literally went in one direction. You know, I remember taking a position of an evening, waking up the next morning and being 200 pips in profit over the Asian session. When has that ever happened before? Right? So anyway, we had these big directional moves, which were fantastic. However, over the past sort of 3, 4, 5 years, that volatility has decreased. So there isn't as much momentum in the market. There are also no clear winners in the market as of late. So what I mean by that is, whereas before, let's say, for example, the dollar yen, a massive carry trade pair. All right. So people would sell the yen, buy the dollar. Okay. So the dollar yen would increase in value. Now, there was a clear winner there. There was interest rate differentials. There were fundamentals behind the positions, and that would go in one direction. Fine. Wonderful. Today, you can't find one economy that's particularly better than the other. All of the economies out there, they're all struggling. Everybody's suffering from the same thing at the moment. Okay, so there's all of the big funds, they don't know where to take their positions. They can't position themselves for a major trend and everything. So what they need to do instead is that they need to exploit the consolidation. All right? Sorry, quick question here. Didn't understand how they need for a liquidity linked to why they do this. What do you mean, Drav? Well, ultimately, they need to get into a position, okay, and they don't want to move the markets. All right, so if I take this again. So let's say, for example, we've got that sort of action coming on here. If they were to sell, just from here, if they were to sell when everybody else is selling, okay, they'd probably start selling here, and they'd get their whole position into the market somewhere down there, okay? However, if, got that same scenario going on there, if they can seduce and entice other traders to start buying at this level here, okay, they're not getting into a trade while there's a load of selling going on, meaning that they get into their position down here. They can start getting into their position and feeding the liquidity up here, which means that their average price might be somewhere around there as opposed to all the way down over here. Do you see what I mean? Does that make sense? Okay, excellent. So, where am I? Why is there perception euro doing, but it keeps within a good range? Because, okay, so there's a perception that the euro's doomed, on fire, but the US isn't particularly looking great at the moment, is there? Are they? With their debt ceiling and everything. If they can't service their debt, they don't really look much better than that. Which kind of just goes to prove the theory there that there are no clear winners in this particular market. At the moment, your choice isn't who is the better currency pair. Your choice isn't which is the better economy. Your choice is which is the better looking of the two ugly sisters. Do you see what I mean? I don't mean that in a derogatory way, but... Okay, excellent. So this basically is just going to back up what I was just saying. So ultimately, you've got the markets that are pushing up to a particular level. You need a strong level, okay? We don't take these trades from miniature levels that really haven't had any sort of significant impact. We want levels where the markets have clearly turned around at, and I'll show you that in a second. So the market comes up to a particular level, comes back down, it breaks through a level. Now, what are the clues that we're looking for that this could be a failed breakout? Well, if this is going to be a successful breakout, you expect momentum in the direction of the breakout. So if people are buying here, and this is a true breakout, you're expecting it to move all the way up in this direction over here, okay? However, what's happening instead of a nice big move to the upside over here, which we don't get, you get a complete lack of momentum. The market comes down to this breakout level here. Instead of holding on this level, okay, because the other alternative is that the market breaks out, comes back to the level, holds above the level, and pushes off again. But instead of all of that, what we actually get is the market coming back below the level and closing below the level. that there is then a clue for us that actually, you know what, this particular setup here, it doesn't make much sense. It's unlikely that the market's going to continue to the upside. So instead what we're going to do is we're going to sell it, and we'll sell it down to either the next low, being this guy over here, or we can sell it further still. And as you can see, from taking these sorts of trades, you get a relatively good risk reward. So whereas maybe you put your stop above the high there, like so, you know, that's what, 1, so you probably got a nice 2 to 1 on that particular trade there for a relatively low risk trade. Is everybody still with me? You still alive? Still awake? Excellent. So how do we trade this? What is it that we're looking for? Well, ultimately, we're looking for a strong level. It has to be a strong level. We're not looking to trade weak levels, because weak levels don't mean anything. We need a significant level that the rest of the market are looking at. Okay, we want a big level that the bigger players can look at and say, yeah, this would make a good opportunity. This would make sense for us to get in here and take a position. We don't want those small levels where they think, well, there's no way we're ever going to have enough liquidity at this level, so there's no point in trading it. All right? We need to wait for the breakout. Once we get the breakout, we have to observe the breakout. So the breakout must show a clear lack of momentum. And I'll show you what I mean by that on the chart in a second. Once we get a lack of momentum, we then wait for the market to close below the breakout level or above it, you know, depending on which way it is, but basically behind it, close back inside the breakout level, if you like. Once it closes back inside, that's our first clue. But we're going to wait for a little bit more confirmation. And we'll wait for the breakout candle. Okay, so we'll wait for a break of the candle that closes inside the breakout area. Sorry, we've got work going on in the background now. Can you guys hear me okay? Yeah? Okay. So we enter on a break of the candle that closes back inside the breakout area. We place our stop behind the candle, or we place it behind the swing point. And then the take profit is completely down to your personality. All right. So if you're looking for a quick 1-to-1, take 1-to-1. If you're looking to trade it all the way back down to the next trouble area, to the next support or resistance point, then you can do that too. But it's a very, very simple strategy. There's literally not a lot to it. It's literally you're looking for strong levels. You need to learn how to identify strong levels. You wait for a breakout, clear lack of momentum. You wait for the market to close back within the breakout level, and then you're waiting to enter on the break of the candle that closes. So you guys know that my brother and I are very, very conservative. We don't like just jumping in just because we think something's going to happen. We like confirmation. We like proof. And that's the sort of proof that we're looking for.